Good afternoon. It's November 16th, 2024, and this is the Wall Street Weekly Wrap Up with your host, John Newquist. And it was a capital U, ugly week. And of course, my overweighted sector, which I'm not fully invested in, healthcare, took a look. And we're going to show you an interesting chart of our portfolio. I was able to find it. My partner pulled up the data, and pretty neat. I was going to look at it. Let's get into the week. ugly week. Hold on. So we'll start with Amazon, one of our mega stocks, Magnificent Seven stocks. No earnings really of any importance this week, but let's go. I always watch the news. The news is just as important and explains why you hold it or get rid of a stock. Again, the hyperscalers, Amazon, Meta, Microsoft, and Google are the big chip buyers for NVIDIA chips, and we watch that. And Oracle's trying to get in the ball game a little bit, but IBM's not going to do that. They're going to use the Amazon data centers with the NVIDIA chips. That's why this NVIDIA chip data centers are big deals. They're not like little. They're big. They're getting big customers. Are going to spend money to get that data and analyze it because you can't get all the chips. So the big four get 50% of the chips. SoftBank's going to get the first round of them, which is fine, but and the Blackwell's going to be faster. So, wow. Again, access to the data, and I've got it. I got OpenAI, I got Google, I got Meta, and I use it every day. And I'm showing people how you can do it in any kind of possession. And it'll come up when we talk about healthcare. So, let's get into Bitcoin. Oh my God, look at this. Boom. Up to 93, back down to 90. This is a breakout. When we get above the 75, that was our new high. We are in record territory. I mean, I'm watching these ETFs buying the Bitcoin, and it's hot. And, you can go in there. There's other ones. I mean, I always look at it, and, I says you might want to start thinking about adding Solana, Cardano, Dogecoin, and a couple of the other bigger ones where they're used in either an international trade or country-to-country transactions. So, it's just a hot area. You got to have some. It's about 2% of the portfolio. It's not much. Gold is 5%, and collectibles 5%, and you got to have what I call about 80% equities and some cash. And then I'm not a bond person. When I worked at Merrill Lynch, I have a 7.6% bond. But it's hot. How high could it go? It could hit, a lot of people are thinking it might hit 100. It's called FOMO, fear of missing out. People who sat there and didn't buy it all over here do not want to be out there at the end of the year and say, I didn't buy any Bitcoin and I didn't get any of the ride. And they'll say, wow, you lost 50% gains. That's pretty bad, So you got to have at least 2%. You can ease into it. You can go in and buy like tenth of your 2% or 0.2% of your portfolio, or just buy it and then just add on to it slowly. You don't have to buy it all now. You don't have to get in now. Just buy some. You're in it. It may not be as much as you want to, but just go in. Remember, parabolic ski slopes come down. They don't come up. Well, usually they go. All right, look at this chart, man. Your account had a cumulative rate of 35% from January 1st. The year-to-date, Schwab has got the data now. You can pop the chart out. And how does that compare to our benchmark, S&P 500, 23%? We are 12%. We are the best in the country. There is nobody better than us, period. You show me somebody who's in the S&P sectors and doing better than me, good luck. There's nobody. I beat every manager in the Morningstar. Every manager. Last year I tied with the one guy, but I didn't lose, and that's it. That's what happens when you got a lot of years of experience and stuff like this. And we're going to post it because it's not bragging if you did it. It's one of the famous quotes and stuff. These charlatans and these hucksters and these carnival barkers. Oh, we're going to do this stuff. You can bid all this up. We diversify because it's less risk. Yes, you can sit there and do it, and I might show next week if I call my low interest. Zero interest portfolio, which has done a tremendous job, but we balance it with a big chunk of the high interest, what was then high interest portfolios, because that's stability. I mean, the idea of venturing across the sectors, we made 14, not the S&P's 11, is that we have less risk. That is the key word. We're diversified. We can take hits. And someday this tech's going to come down a little bit. Hold on.
This is a reminder. Talk about political appointments and recess appointments.
Oh, Alexa, stop. You know,
This is a reminder. Talk about political appointments and recess appointments.
All right, what she's trying to tell me is that we get into the recess appointments. They don't have to have hearings. They can just say we're going to recess the Congress and all the cabinet picks are pre-selected and Kennedy Jr. and Max Gaetz and everybody's in there. Now, will that happen? I don't know. If there's an overwhelming group that doesn't like it, we don't know. But you know, with if you're a senator and you're vehemently against some of these picked candidates, it might be pretty tough on you. You know, you might be finding yourself kind of like alone a little bit. So I don't want to get into politics, but I'm just going to tell you, we don't know what's going to happen. That's why we're diversified. We can insulate. And you're gonna, when we talk about healthcare, I'm going to explain why I'm still in healthcare. We're going to probably pare down some of the healthcare by the end of December 21st or 31st and stuff. But this is a big deal. And this is why, you know, I don't remember last time it didn't go. I mean, maybe like 2001. I don't think I beat the average. You know, that was a bad year. I was heavy in tech. And tech went down another 40%. That's when our model changed. Because you can't be doing 40% losses like certain fund managers I know. 40% down, 40% down, 40% down. So if you had $1 million, you got 600,000. Next year, you got 360,000. Next year, you're down to 200,000. You just lost almost all your portfolio because you invested in a hot sector and it did it. Remember, the market can remain irrational longer than you can be solvent. John Maynard Keynes. It's happened. So that's why we diversify. And of course, there's U.S. is a lot higher. And I don't want to beat on this, but that's why you want to do diversification. You want to buy, you know, the high tech stocks and the Mag 7. Good. You'll probably beat the average, but that's not where we're in there. You know, they don't talk about the thousands upon thousands of people who got crushed in 2000 to 2003 by betting on tech, who had great earnings and everything else. We didn't bet in tech, but we're looking at it. It's trying to lower the risk and beat the S&P 500. 8% is a good return every year, and we're doing killers. 33% last year, we're up 35% after a horrible week. After a horrible week, almost 70% gains in 2 years. You go buy a bond for 5%. Wow, you got 10% up. It's a big difference when you talk money and retirement stuff. That's why I'm not joking about it. It's a big deal. I'm not charging any money. I'm not charging $300,000, 2% of your income to manage it. You can do this yourself. You see the stuff we buy. We've been posting it for 2 years and longer. It makes a difference. All right, let's go on. Indicators. Oil is a little lower. Boy, look at that, 67. The key word, Darren Woods of ExxonMobil. We'll make money at $40. That's all you have to remember with oil companies. They're making money. They're printing billions of dollars. They're record production, and it's going to go up even further. But, you know, like Darren says, we don't plan on 4-year presidential cycles. We plan for 20 years. And so if we go and do more exploration, we're going to have some guarantees that they're not going to cut it off after a new person comes in. That's part of the whole deal with them. And, you know, it's a lot easier to, you know, make it better than what we got than try to hope we can find something else and then some administration says, oh, we're going to cancel that. So gas is coming up, still high. Going to be an expensive winter for heating your house with gas. Gold, again, the commodities are coming, the Bitcoin's going up. One of these first inverses here. So you can take a look at all the metals are kind of going to be choppy down like this, pretty high beginning of the year, and now we're coming down, and that's like there. Copper, $4. Remember that $4? If it's below $4, I call it a recession. That means nobody's building, nobody's buying copper pipes. That means that's going to be an issue. Copper wires. That's a number I watch because this kind of tells me the health. Remember, this was 450 a few months ago. CPI, you know, everybody watches it. I watch it. This is, you know, if you get in there and you get 12% inflation, man, people feel pain. It's a pain. I was listening to, you know, Jeremy Stiegel of Wharton Business School, I think it is, and he was talking about inflation doubles every 10 years historically. You know, so what cost Let's say 309 for gas will be 10 years from now, according to his method, it'd be 610. I don't think so. I don't think so because we had $3 gas 15 years ago. So, but some other stuff, some stuff did. Did the houses double in 10 years? For some people, it did. You know.
This is a reminder. NVIDIA earnings coming out next week.
Oh well, yes, that's important. NVIDIA earnings come out next.
NVIDIA earnings coming out next week.
Yeah, that's important because that's the king. The number one most valuable stock in the whole country, the whole world, is NVIDIA. Everybody's going to do it. They are selling it off like usual beforehand. I mean, I didn't even put NVIDIA in this week's thing. Thank you, Alexa. But the core, 2.6. That's pretty good. Boy, I remember growing up it was 5, 6 all the time. So 70% chance of another rate point. Well, that's a big deal because, when we get 2% cut, our 2% note going up and the cuts are coming, not good. Tesla, oh my God, look at us. You can see when the election pop come, went down up there, went there again. November 7th, man, it just jumped and it went sky high up to what, 350? Now you're down to 320. You almost lost 10% of your money. You better be timing it right. I just tell people, the revenue increases are not worth it. You can talk about hope and future and optimism and everything else, but you know what? I look at the revenues. And maybe it'll be $1,000 stock when Optimus comes out there for 100,000 or 200,000 and people are buying it for their house. But I just look at it. He's way behind on driverless autonomous technology. Waymo, which is Google, is working now. I don't want to hear about 2028 it's going to work for Tesla. And of course, if they take away that EV tax, that's why it dropped like a rock. There's going to be a lot less electric vehicles being in there. And of course, they got a recall this week. Wow. 2,400 Cybertruck. That's not much, but I don't know how many they sold, but that's well, you got to have a stomach of steel to be in this stock. And, I tell people, we bought it, we doubled our money, we sold it. That's fine. We're not in it now. Home Depot, everybody's liking this one. It's kind of coming up a little bit. It hit a kind of top of 400. You think about it, you bought it in low of June. That's not bad. That's a pretty good shot of gain. Revenue's 6.6, so it's kind of pricey for the increase. But everybody says, as interest rates go down, people will work on their house. They got to pay the credit cards off first. They'll work on the house, but there's a lot of things. People are max credit cards, which is like the subtle crisis. And that's why they're hoping it goes down so people get a break on the interest rates, they hope. Disney, okay earnings. Again, another one, 6% earnings. If you're double digits, then I start waking up. But 6%, when we're trying to get 8% growth on our S&P portfolio, I don't want to hear about 6. I try to make sure it's a little bit better than that overall. Streaming is the way it is. It's the future, and parks are good, but people, again, cutting back. Not a bad quarter. I mean, they guided next 3 years will be above consensus, which is why it popped. But they got to deal with it. Got a lot of stuff in there. Iger's not going to last forever, and the new successor, let's hope he can do it. But we're not in Disney. A lot of people are, and I have people. Oh, I bought it at 85. I'm doing great. Okay, good. There you are. You did 30, 40%, whatever it is. But the S&P is up 25%. So we come back to January, you're up 95, you went up 20 points. Well, that's a little bit below the S&P. S&P is 25. So Palantir, the top S&P gainer. This has been switching all around. Of course, the CEOs just pretty tough people. Go kill them. They take America and kill everybody. It's like, wow. PE's 140. That's just obscenely high. You can do it, but I look at the revenue growth isn't that fast. It's not growing 70% a year. They talk of their AI, they're making everything more efficient. I know that's in there, but maybe when it was floating down here, you could have bought it at 25, and now it's doubled your money. But I just don't. I just watch the revenues, and it doesn't excite me. Healthcare, remember the yellow is what we own, and I kind of put them in order of where the market caps are. They're not exactly right, but United Healthcare is big. But look at this, healthcare's been pretty good except for Bayer out of Germany, and You know, our biotechs have no income; they just get research grants. I just really put them down as, you know, as X's. You know, but the XLV, this is all the charts. You know, as it became apparent, the other administration might kick out the current one. The biotechs, the techs, the healthcare stocks have all waterfalled down, kind of coming down cascading. And where's the low? I don't know. It could get down back a little further. You know, the XLV represents a lot of these companies I just showed up here, and I just don't know how far it's going to go. But the issue is, AI will change healthcare. Hold on.
This is a reminder. People are selling on overfire, and it might be the most oversold it is.
Overfire. What are you
This is a
talking about?
reminder. People are selling on overfire, and it might be the most oversold it is.
Why don't we just say healthcare? You know, healthcare is the most oversold, and it's possible. It could be down here, but this is a pretty area. I mean, they're looking for some stability. It broke below it, and where is it going to go now? Or next is it? Do we have support at 138? Maybe we do. But healthcare will be changed by AI. That's why we're in it. That's why we're looking at. We might trim. We're going to go look at, you know, like I said, the month of December. All the dogs are going to be kicked out. If I got 5 dogs in healthcare, guess what? They might be all gone. We will probably keep the Novo Nordisk, which would take a massive collapse to sit there and do it. Merck, you know, like I said, Keytruda, good for mesothelioma/asbestos. You know, again, you know, people are starting to feel pain on Merck stock. You know, we own Merck and not a big position, you know, but it is up there. Pfizer we bought as a kind of a low trade, and it's not working out. So you can probably figure Pfizer won't make it past December 31st. But the idea they had a lot of numbers. So when we look at like Pfizer at 31%, that's the August COVID, September COVID. A lot of people got Paxlovid, which is a Pfizer treatment or prevention, whatever you want to call it, for COVID, and that's the surprise. So, but they're thinking, well, Kennedy Jr. would cut it. I just, you know, you gotta just watch. You know, I've seen everything. Just watch. Let's see what happens. You know, you don't want it, the vaccine will be there. You just might have to pay for it. It won't be free. And again, that becomes an issue. And you know, I always go back to Putin. You know, all this stuff, and calling up his buddy and said, "Hey, can you give me some COVID vaccine stuff?" So they sent him some shots. You know, we're all waiting for it to come out for us, and he's getting the shots over in Russia. So, you know, that's what happens. You know, I mean, you can talk about it, but when you think, you know, I might die, you make different decisions. So, Novo Nordisk again, you know, they've got the big ones with the GLP drugs, but liver fibrosis, you know, they're going to do a phase 3. Remember, it's phase 1, 2, and 3, and looks pretty good so far. So we'll see. Again, down here, you know, people like, wow, this is in there. And you know, when they did the earnings here, it dropped a little bit because of it wasn't high as they thought. They would get more sales. Well, this is the same as Lilly, you know. So, you know, and people a lot of times say, well, you should have sold it the Golden Cross or the Death Cross over here. And I was like, well, look where it was. I mean, we look at this as long term. You know, I see holding the stock for until 2030 at least. You know, it's going to affect a lot of people. And then you give the fact that Ozempic might have prevent Alzheimer and stuff. Man, what else can you ask for? I mean, so yeah, it goes up and down. It pays a dividend, and we'll just wait. APGE, you know, same thing. Again, all this announcement stuff scares people, and but they got a lot of stuff. They're going to work on the GLP-1 and stuff with asthma and stuff. They got all these trials going on. I just like it. You know, it just seems to be a fairly good company thinking, and they're not just stagnant. I mean, for the size of employees compared to some of the big farmers, they're doing a lot. You know, so AMGN, other ones, you know, GLP pill maybe, you know, but you know, these are ugly charts, and you know, that's why I said easy to, you know, we've eased in the AMGN. We're not even halfway into our goal, but when it's going ugly, we're just not going to add. We're just going to wait. You know, we can wait through it, and then if it gets something crazy low, then we'll go in there. If you're going to set a 5-year low on a stock we believe in, we're going to be buying it for sure. You know, because we'll go 100%. Novacor, you know, when they stopped that trial and the phase 3 said it was so good, we got to get it out there now. I watched it shoot up like $140 like a rocket down, because you know, they're not going to sell a product right away. Everybody keeps on thinking, you got a great thing, now you're going to make millions of it. Well, 3-4 years, it might be licensed and then go through. But this is going to be for small cell lung cancer by electronic. You're going to wear the little portable Optalua, and it will help disrupt the division of cancer cells so it can't multiply. You know, interesting theory, and it's been working for brain cancer and everything else. So this is a stock we're going to look again, probably a long-term hold. I'm not worried about the gyrations of the stock price based on who's running what policy, because you know what? You got money, you'll get it done. And if it does enough people and saves enough lives, people will change their mind. You know, because the data's there. You know, you can question things, you can go through things, but if you get the data, that's when people start looking at it. Now, some people are idiots; they're not going to look at data, but I give them a benefit of doubt because, like I said, if they're starting to be affected and they're old, it could be an issue. Arrowhead again, you know, working in the area. Got a couple other ones for obesity drugs. I tell people be careful with the obesity drug ones because now we got like what we had with the internet rush in the 90s, where people were an internet company, you know, pets.com, drcoop.com, all these companies you can make a fortune on, but no revenues, you know. So it's got to go through past phase 3. This is a couple years, so we're just nibbling on these stocks, you know. And again, I don't look at it; they're all down. And the week was ugly. Holy smokes! Look at Meta down 5%. Tesla a little bit down. Amazon. I mean, you know, we're not in Lilly 10%. You know, it's tempting. It's tempting to say, okay, let's kick 4 of the ones we got and go buy some Lilly, because Lilly's got a heck of a pipeline and a heck of a thing. And if they're going to get crazy and go like low 700 or even more, then we're buying Lilly. You know, that's the other one out of all these healthcare stocks they're looking at. I mean, and then, you know, like I said, there wasn't everything was down, but you just have to remember that there's going to be a lot of gyration. We predicted 5 to 20% correction by, you know, the January 20th or something like that, and we'll see. You know, we got a bad week, another bad week like this, so we've already hit it. So we hope we don't have it, but corrections are good. It weeks, you know, shakes out a lot of people, and the ones that hold can survive through it. So hold on, be strong, and I'll see you next week. Thank you.